Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. President Trump pauses U.S.-led efforts to help stranded ships exit the Strait of Hormuz to allow time for a potential deal to end the war. Stocks climb to a record and oil extends declines after signs of progress towards a final agreement with Tehran. That is adding fresh momentum to markets already lifted by a tech rally. Plus, Anthropic unveils 10 AI agents for financial services tasks, including drafting pitch decks and reviewing financial statements. Well, it's just gone 8 a.m. across the Emirates. I'm Johannesburg in Dubai. There's a lot of green on the screen this morning, and it's not necessarily Middle East related, though we did get a lot of news overnight, and namely that project, dubbed Project Freedom, that President Trump introduced at the beginning of the week to allow vessels to transit or safely transit through the Strait of Hormuz. That plan now has been put on pause. And what he is doing is opening up the window to further negotiations with Iran. So once again, we're in a situation where there's still deadlock. There's still an impasse around the Strait of Hormuz. The U.S. aren't necessarily provoking with this new Project Freedom, but at the same time, there's a lack of clarity about where all this leads. However, that is enough for markets, because what we are seeing is an extremely strong handover from Asia today, and it is not mainly Iran focused. Of course, there the big theme has been AI and tech once again, but a massive amount of money still going into many of these sectors. The Asia Pacific, ex-Japan, Japan still on holiday, up 2.5% this morning. So the bourse positively soaring. S&P futures also leaning positive, up 0.3%, once again at an all-time record high yesterday. We closed at a high for Wall Street. AMD, one of the stocks in focus yesterday, that stock at a record high as well, after they issued a very strong guidance regarding their data center spending and the revenue guide for the future. So once again, chips, tech have been driving this recovery in U.S. bourses. Brent, also take a look here. We are down 1.6% this morning. No surprise, because they are reacting to the news that maybe there is a diplomatic window between U.S. and Iran to look forward to over the coming weeks. Let's see what happens. And then the USD also dipping a little bit this morning. So unwinding whatever minimum safe haven appeal it had in the last couple of days, given the events in the region. We are dipping now 0.2%. And the chart that I wanted to flag to you, to come back to what I was saying at the top, look how much money has gone into the tech ETF. That is the QQQ, if you are familiar with the code for it on the terminal. But essentially, we have seen the largest inflow into this ETF in 5 years. And it tells you that retailer-backed investors, once again, piling into tech. There were some concerns a couple of months ago about what the rollout of AI would mean, especially for industries that were likely to be disrupted by it, including software firms. Not the case anymore. It's once again back in fashion and has been leading the rally for the S&P. The breadth is very narrow there. All right, let's pick up the conversation with how markets in Asia are faring with Avril Hong in Singapore. And Avril, I'm guessing the green that we're seeing today is not just on back of a reduction of some of the geopolitical tensions in this part of the world, but also tech-driven too.
Yeah, I mean, investors are sending the message that beyond the geopolitics, oil prices, the macro backdrop, they are chasing the rally, and it's all tech-driven as they bank on technology that's going to be changing the world. That's the message that you're getting across markets. Any way you slice it, these indices, they're all at the highest we've ever seen them. The Kospi has risen to well past the 7,000 level. And just at the board as well, as we talk about some of these drivers for the markets, one of the stocks in focus, of course, is Samsung Electronics, and it has crossed in market cap $1 trillion. So it's now more valuable than Berkshire Hathaway. Of course, this is a company that has been benefiting from the memory chip shortage, but also from reporting earlier in the week that Apple is in talks with Intel, with Samsung, to maybe make some of its chips that go into its devices in the US. So it's a lot to do with tech today. Jumana?
Wow, another $1 trillion company in the world. Avril, thank you for that. Avril Hong in Singapore. Now back to our top story. President Donald Trump has announced that he will pause a U.S.-led effort to help stranded ships exit the Strait of Hormuz to see if an agreement with Iran to end the war could be finalized. Trump's decision came a few hours after the U.S. said offensive operations against Iran are over as it shifts to protecting shipping in the Strait of Hormuz.
Operation Epic Fury is concluded. We achieved the objectives of that operation. I'm not going to, we're not cheering for an additional situation to occur. We would prefer the path of peace.
The back and forth highlights the bind in which Trump now finds himself. For more, we are joined by Stuart Livingstone-Wallace, our executive editor for MENA and Russia. Stuart, is it fair to say that the Trump administration is looking for a way to wind down this war?
Yeah, and it's looking ever more desperate, I think, to do that, because we've had it's been a completely crazy couple of days where we have this Project Freedom announced, and I think basically within 24 hours they pulled the plug on it when they see that this attempt to reopen Hormuz leads to this, rather dramatic escalation. Becomes very hostile, very kinetic, very quickly. And now the US president says there are, signs that they can come to a deal. That's not the first time he's said that. It's very hard to see what the path forward here is, and I don't think there was a lot of comfort yesterday coming from some of his officials where they were talking about, we're going to stabilize the situation and then the world will take over because they need Hormuz more than we do.
I mean, for me, what is most remarkable is actually hearing the Secretary of State, Marco Rubio, say that they have achieved their objectives of Operation Epic Fury. And if you go back to what they spelled out what those objectives were, I mean, they sort of moved and evolved over time, but essentially it was around the nuclear file, it was around ballistic weapons, it was around the proxies in the region. None of that has been addressed.
Right. I mean, it is fair to say that they have degraded Iran economically, militarily, but as far as we can tell, the regime's still there. It may be different faces to the ones that we had in February, but nonetheless it seems to be solidly in place. And I think the events of the last 2 days shows that certainly the IRGC is firmly in control of what it wants to do in Hormuz and is prepared to act very quickly and very dramatically. So the question is, what exactly does victory look like here? Not entirely clear, as you say. They keep changing the narrative about what victory should look like.
Yeah, and a simple reopening of the straits and going back to where we were before the war started is not consistent with the reason that they entered into the war in the first place. What is the situation now on the straits? Another deadlock?
Yeah, I mean, it seems largely as before, which is that, it is effectively shut. We did have a few ships go through on Monday, it would seem, but, we're talking about 2 or 3 maybe. And at the last count, we've got well over 1,000 ships still stuck there, something like 22,000 seafarers. That doesn't look like it's reopening anytime soon. But again, look, we'll see. This has been a series of surprises. We shouldn't rule out that maybe there can be a deal and we come to some sort of date on and Hormuz reopens. So, you don't want to be too pessimistic, but it's looking quite unlikely anytime soon.
Yeah, okay. So one thing that I want to bring up as well, the Iranian foreign minister is in Beijing today. He's meeting with his counterpart there. Is it right to expect maybe some form of China participation in this new diplomatic effort, should things be successful in the next couple of weeks?
Yeah, I mean, it can't be ruled out. You've got Trump going there himself in, a couple of weeks or thereabouts.
May 15, 16, he's meeting with Xi.
Yeah, exactly. And we know how dependent China is on imports of commodities, right, of everything. And Hormuz is absolutely critical for China. So there's a huge interest there from China. The question is, will it get more involved than it has been? Because so far, China's been taking a little bit of a backseat here, as far as we can tell. Maybe now this is the moment that it comes to the fore. But again, too early to say. I think we'll find out in the next 2 or 3 weeks just what role it is prepared to play.
And there are plenty of pundits out there who are saying that Trump quite simply didn't want to escalate the situation before that meeting with Xi that's happening next week. Stuart, thank you so much. Stuart Livingstone-Wallace, our executive editor for MENA and Russia. Well, still ahead, we'll get the market outlook with Bank of Singapore's Mehvish Ayub as traders embrace risk driven by progress towards a possible Iran agreement and a strong tech rally. This is Bloomberg.
One way you can think about what the Fed can do is about its balance sheet and what the Fed can do with its balance sheet. And, I think given the current environment and what's happening in the Gulf, it's unlikely that the Fed can cut rates. Why is that? Because if you were to cut rates right now, the back end of the curve would probably, go up.
PIMCO CEO Manny Roman speaking to Bloomberg at the Milken Global Conference in Beverly Hills. Well, stock traders are turning risk on as President Trump signals progress towards a final Iran deal, adding to momentum from a tech-led rally. Oil is extending its decline while the dollar is weakening against all major peers. But BlackRock's Rick Reeder thinks geopolitics will continue to weigh on markets.
I think it can persist. When we think about portfolio allocation, and I know we've gone through this, you still have a lot of danger out there in terms of geopolitical risk. But if you said, what's my convexity of upside, downside, if you know you're going to have either good news or bad news, and they're going to correlate together oftentimes, right? Like equities have a whole lot more upside than quite frankly, interest rates do today.
Joining us now is Mehvish Ayub, Bank of Singapore, Head of Managed Solutions Advisory. I'm walking in this morning, when you heard my introduction at the top of the show, just another very strong handover from Asia Pacific, another record close for the S&P, as though these markets needed another excuse to keep rallying. We got one overnight with President Trump's announcement. Where do we go from here, Mehvish?
Good morning, Jemana, and thank you for having me on. No, it's very interesting. We're having this, really sort of yo-yoing of foreign policy, which is ultimately driving risk sentiment in markets. I think at this stage, if we look at performance in equity markets, particularly in the US and emerging markets, anything tech-related, it has been phenomenal over March. And we've seen that momentum continue to some degree throughout April and May. In April and May. The issue is where we stand right now. What's the upside from here for further equity gains, given the geopolitical risk that we still have sitting as an overhang? So given that, we think it's okay to be cautiously optimistic, but to have the right hedges and diversification in your portfolios.
I also, at the top of the show, mentioned the huge amount of inflows that we're seeing into QQQ, that is the tech ETF. Is that justified in your view?
Yes, I think, when you look at ETF flows, it's much more indicative of what we're seeing on the retail and the wealth side. And I think, there's good reason in terms of the earnings that we've seen coming out of tech companies, particularly over the last 2 weeks, the commitment to CapEx, and actually some of those earnings really showing, AI beneficiaries, and that really coming through in those earnings surprises there. So it is justified, but at the same time, those inflows that have come in can just as quickly come out from a retail perspective in ETFs. It's much more important to look at sort of longer term institutional flows into the asset class, which have also been there, to be fair.
Yeah, a LIFO, I think they call it, last in, first out. Mehvish, what upsets this market? I mean, there were plenty of opportunities for us to get a pullback in the last couple of weeks, and actually April was a very strong month for the S&P. Where does the downside surprise come from?
Yeah, so I think, Monday was a very stark reminder of how fragile the current ceasefire is, and also the yo-yoing of foreign policy we've seen from the US. So given that, we have to consider a tail risk scenario where oil prices really shoot up if there's further escalation at any point in time. And actually, we go from a sort of transitionary inflationary environment to a more persistent inflation environment, which leads to demand destruction. So that is a terrorist scenario which should be baked in. But also, I think you have to position portfolios in the medium term to consider that at any point in time, you could be subject to bouts of volatility, and really not to have all of your eggs in one basket. Diversification is so important here, not just geographically in equities, but sectors and styles. As an example, quality companies which have good pricing power are some that could actually really withstand upcoming bouts of volatility, having alternatives in your portfolio, having gold as a hedge, and even having cash as dry powder. So make sure that your asset allocation is resilient.
We've been watching yields very closely. 30-year yield in the U.S. getting close to that 5% mark, has pulled back now with the drop in oil. Would you buy 30-year UST at 5%?
So what we have been in our fixed income portfolio is actually relatively neutral on duration for quite some time for this exact reason. What we're seeing in terms of the energy shock is it manifests both in oil prices and long-dated government bond yields. So I wouldn't be a buyer here. But from a long-term strategic asset allocation perspective, yields higher is generally a good thing. So it means that you should still stay invested. Whether you want to go overweight or whether you want to be adding at these levels is more of a tactical decision.
Mehvish, thank you so much. Great to have you with us on the show. Mehvish Ayub, Bank of Singapore, Head of Managed Solutions Advisory. Now for a look at some of the other stories we're following. The Securities and Exchange Commission has released a proposal to allow U.S. companies to report earnings semi-annually instead of quarterly. The move could potentially reduce how much information publicly traded firms must share with investors. The SEC chairman, Paul Atkins, has promised to fast-track the plan, which President Trump first floated last year. Alphabet is said to have sold its biggest tranche of euro-denominated bonds and its first Canadian dollar notes, raising nearly $17 billion. Sources say it priced bonds worth 9 billion euros and also raised 8.5 billion Canadian dollars from a four-part sale. In its push to fund AI infrastructure, Alphabet has diversified its funding away from the US dollar more than any other American hyperscaler. And Bloomberg's been told that Apple will let users choose from a range of rival AI services to power features across its software. Users will be able to select third-party models for tasks such as generating and editing text and images. And Apple is also introducing a revamped version of Siri as a standalone app, with the changes to be rolled out in an upgrade later this year. Live Golf is seeking new investors after Saudi Arabia's public investment fund said it will stop funding the league. The company has hired Gibson, Dunn and Crutcher to help secure long-term partners and reshape its business model. Coming up, Bloomberg understands that officials in Abu Dhabi are discussing the creation of a defense investment vehicle. More on that scoop coming next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Bloomberg has learned that officials in Abu Dhabi have held talks on creating a new defense-focused investment vehicle. The UAE is looking to strengthen its military capabilities after coming under attack in the Iran war. Joining us now with the details is Bloomberg's Alex Doulos. A great scoop from the team. Talk to us about Abu Dhabi's plans and what they're looking at doing to beef up their defense.
Hey, Jumana, thanks for having me on. Yes, so the story is basically that officials in Abu Dhabi have held preliminary talks on creating a new defense-focused investment vehicle. So it's coming at an interesting time where the UAE and the wider Gulf region are expected to increase spending and investments into defense. And I think what's interesting about this story is that this new vehicle will be looking to take stakes in defense companies directly. So instead of just buying weapons and using them, they can take stakes in those companies and bring a lot of that production onshore.
And which countries are they going to be investing in primarily? Is it local or international?
So yeah, it will really be international. So European, the US, and especially Ukrainian and Turkish drone manufacturers is of interest. If you, I don't know if you saw, but President Zelensky was in the Gulf region signing defense pacts with a lot of countries in the Middle East. So the idea is to invest in international companies and bring potentially some of those onshore to produce weapons and arms materials in the UAE.
Yeah. Okay, and in terms of who is actually driving these discussions from Abu Dhabi leadership, do we have a better idea of which ministry or which minister specifically is behind it? And also an idea on timing, when exactly it's going to be launched?
Yeah, so at the moment it's happening at a very high level within Abu Dhabi. There's the Crown Prince Sheikh Khalid bin Mohammed and Khaldoon Al Mubarak, Chief Executive Officer of Mubadala, involved in those discussions. And our understanding is that this new entity will be outside the orbit of the existing sovereign wealth funds. I mean, Abu Dhabi has $2 trillion of sovereign assets, so it's going to be sitting outside of that. The discussions are happening at a very high level at the moment. And in terms of when it will launch, it seems quite early days. So we'll have to keep an eye on when that actually happens.
Alex, thank you so much for you and the team for bringing us that scoop. Alex Duller from Abu Dhabi. Now for a look at some of the other stories we're following today. Nigeria's Access Bank plans to reduce its stakes in some foreign units to comply with new central bank rules. The regulator has ordered lenders to cap investments in overseas subsidiaries at 10% of shareholders' funds, giving banks a year to adjust. Access says it is considering divestments but will retain control of the businesses while also exploring refinancing options for upcoming debt maturities. Kenya's government plans to introduce tax measures to help raise nearly $1 billion. The move risks renewed protests after similar plans sparked deadly unrest in 2024. The proposals are aimed at boosting revenue and helping narrow the fiscal deficit. The Dutch-flagged expedition cruise ship, which is hit by a deadly virus outbreak, is heading to the Canary Islands after several passengers were evacuated. The World Health Organization says 7 cases have been linked to the vessel, including 2 confirmed hantavirus infections and 3 deaths. And let's take a look at how some of the regional bourses closed in yesterday's trade. Take a look at, Tel Aviv closing up in the green, but the Tadawul index in Saudi Arabia down 0.75%. In a moment, we're going to be talking about the budget deficit numbers that came through from Saudi Arabia and, of course, what the latest is regarding the Aramco's official selling prices to Asia. So big drivers of the Saudi Arabian economy still. The Dubai index ending the session down 0.9% as well. Egyptian Stock Exchange continues to do very well throughout the course of this year, up 1.1%. As for broader equity markets, we are leaning towards the green. It is a very positive setup for European trading. S&P futures also up 0.3%, building on a record high from the close yesterday. Nasdaq also up 0.2%. One of the stocks we're watching out for is AMD, also at a record high. So chip makers continue to propel this rally. And then European markets also quite positive, up 0.8%. Coming up, Trump says efforts to help stranded ships exit the Strait of Hormuz will now be paused as both Iran and the U.S. vie for control. We'll be speaking to Shipping Voices next. Good morning. This is Horizon's Middle East and Africa, our top stories this morning. President Donald Trump pauses U.S.-led efforts to help stranded ships exit the Strait of Hormuz to allow time for a potential deal to end the war. Stocks climb to a record and oil extends declines after signs of progress towards a final agreement with Tehran. That's adding fresh momentum to markets already lifted by a tech rally. Plus, Anthropic unveils 10 AI agents for financial services tasks, including drafting pitch decks and reviewing financial statements. It's just gone 8:30 a.m. across the Emirates. I'm Joanna Versace in Dubai. Well, waking up to news that Project Freedom, the U.S.'s plan to, I don't want to say escort because the U.S. were never providing escorts, but guide vessels through the Strait of Hormuz, has now been paused. And President Trump once again opening up the window to diplomacy and potential negotiations with Tehran. So that's the geopolitical news. But in the driving seat for these markets, as has been the case the last couple of months, we are talking about this massive rally in tech stocks, in AI. Anything related to chips has really been soaring. So handover from Asia Pacific, ex-Japan. Japan's on holiday today. Very strong, up 2.7%. S&P futures up 0.3%, building on a positive close from yesterday, an all-time record high for S&P. Brent dipping, of course, on the latest developments around the region. We'll get to that in a moment. Just shy of $108, down 1.8% today. And then the USD down 0.4%. So those are your markets. Let's go back to our top story. President Trump pausing a U.S.-led effort to help stranded ships exit the Strait of Hormuz to see if an agreement with Iran can be reached. The financial impact from the Iran war will probably show up more clearly in the second quarter data, but major economies in this region are already under strain. Saudi Arabia's fiscal deficit widened in the first quarter to the highest level since 2018 as spending on projects to diversify the economy continued to rise. Joining us now is Bloomberg's Abir Abu Hamad. Let's just start with the geopolitical news and then we'll pivot to Saudi Arabia and their finances. How big of an announcement was President Trump's True Social post overnight a couple of hours ago?
Yeah, good morning, Joanna. Look, so I mean, Project Freedom was announced. We spoke about it on the show on Monday. It was, as you mentioned, not for the U.S. military to escort ships, but to guide them through the Strait of Hormuz that has been largely closed since the beginning of this war, roughly since the start of this war in Iran and across the Gulf. So what we saw is that President Trump actually came out and said, it is on pause because they're making way, the U.S. is making way for diplomatic efforts. Now, he got a response from the president of Iran, Masoud Pezeshkian, who said that the U.S. demands have been maximalist, essentially. I'm not quoting him, I'm paraphrasing what he said about how the U.S. expects him to essentially bow down, and that's not what Iran is willing to do, and he called a lot of the U.S. demands as impossible. So this all brings into question, again, the Strait of Hormuz, and whether the double blockade is going to be unlifted if it doesn't look like that's the
and
case.
It's interesting when President Trump made that announcement about pausing Project Freedom, is what it was called. He also reiterated that the U.S. blockade was actually going to stay in place. And so we are still looking at a situation where it's effectively shut. What have been the ramifications to some of the regional economies? And of note, obviously, those Saudi deficit numbers yesterday. Yeah,
so the first quarter numbers do not reflect the full war story, but they do reflect it in the March data that is part of the first quarter numbers. So a deficit that is the highest since the fourth quarter of 2018, that's just a couple of years after Vision 2030 was announced, Germana. And so the numbers are 126 billion reals in deficit. That's $33.5 billion. That is higher than the numbers we saw in the fourth quarter, about 95 billion reals. Now, something that is worthy to note in these numbers is that we know that economic growth in the first quarter of the year had accelerated slower than previous quarters, 2.8%. And Goldman Sachs expects that Saudi Arabia, from the start of the war until now, or since oil prices have accelerated, is set to make 10% more in oil revenues. Now, oil revenues did decline about 3% during the first quarter. That, does not reflect the full extension of the acceleration in the prices of Brent. But going forward, they're set to benefit from this massive acceleration in oil prices, but also the fact that Saudi Arabia has been one of those countries that was able to pivot their exports elsewhere.
And to reroute. Yeah.
Absolutely.
Yeah, so they're benefiting. In coming months, we'll see how much they benefit, essentially, from those higher prices. Abir, thank you so much. Bloomberg's Abir Abu Hamad. Now, top U.S. officials spent money on Tuesday offering new details on the role the U.S. military will play in helping ships pass through the Strait of Hormuz as part of President Trump's bid to break Iran's chokehold over the waterway. But Trump shelved the operation entirely after being warned it risked escalating the conflict. The strait so far remains largely empty, with no new commercial ship crossings recorded. For more on the impact on the shipping industry, Dimitris Maniatis, Marisks CEO, joins me right now. Really good to have you with us on the show. Look, President Trump has paused this Project Freedom, which was the plan to guide some of the vessels forcibly through the Strait of Hormuz. Were you confident that it was going to work to begin with, or was it just a provocation on the Straits?
I wouldn't characterize it as a provocation. Generally speaking, the shipping industry has been waiting for some kind of development that would guarantee the safe passage of vessels without necessarily them dealing directly with Iran or any other party to get that guarantee for the safe passage. So the initial announcement of the U.S. operation to guide or escort, it's unclear, vessels through the Straits of Hormuz was very welcomed. However, there have been many such announcements and promises. The ceasefire, the Straits of Hormuz are totally open. The Iranians saying, no, they're not. So it's everything is being taken with a pinch of salt and a lot of suspicion. Industry is not moving.
One thing that really stood out to me from the press conference yesterday, it wasn't the flagship headline, but still, the U.S. did flag that there are 1,550 vessels, 22,000 sailors trapped in the Persian Gulf. What is life like for those sailors who've been sitting there for over 2 months now. What are you hearing on the ground, or on the water in this case?
And another interesting number that nobody seems to be speaking about lately is that we have over 12 mariners killed during this period from the beginning of hostilities. These are innocent people that are just doing their job who have been killed through the actions of warring parties. Life for mariners inside the Persian Gulf is not that desperate, but again, it depends very much on the vessel that they're on, the owner and operator of that vessel. I'm aware that crew changes have been conducted on vessels that are trapped within the Persian Gulf. Generally, I don't see mariners facing any severe physical difficulty other than the extreme psychological stress of being in a combat zone, of not knowing what's going to happen. It is a very difficult situation for them.
Yeah. What is the best way, to your mind, to safely get these trapped vessels out of the Persian Gulf? Is it going to have to be a mutual lifting of blockade? Is this the only way that this is going to be resolved?
There are many ways to answer your question, and to give you some interesting insight, there are vessels whose owners and operators, and of course their crews and insurers, are willing to take the risk to escape the blockade, this trapping in the Persian Gulf. Those ships usually are sailing through the southern passage of the Straits of Hormuz, very close to the Omani territorial waters. Others, it's been discussed that are dealing either with the Iranians directly for safe passage. But in order for ships to freely move through the Straits of Hormuz, there has to be a total end to the war, or a lifting of any blockade or any suppression of movement. There has to be a guarantee of freedom of navigation through the Straits of Hormuz. And again, people are going to look at this in a very investigative eye. Many will not dare move unless they see a clear transit passage through the Straits of Hormuz.
Dimitris, the Iranians keep talking about establishing a new protocol, at some form of a toll structure or some transit fee that they would apply to vessels of certain countries. How likely is it that there would be take-up of such a proposal?
Let's start from the legal status. It is entirely illegal to apply a toll in a natural passage body of water. The Suez Canal, the Panama Canal, yes, of course, those are man-made. And of course, there needs to be a payment for the transit of a vessel because they need to be maintained. In the Straits of Hormuz, something like that is entirely illegal and should be a topic of conversation anyway. But the Iranians are talking about normalizing a toll fee process. And just yesterday, May 5th, they announced the Persian Gulf Strait Authority of the Islamic Republic of Iran, which will be the body that will actually govern this toll process through the Straits of Hormuz. However, it remains to be seen how this is going to be implemented.
Yeah, a big question for the future, and if indeed it can be implemented. Dimitris Maniatis, thank you so much for joining us, Marisks CEO. We appreciate it. Now, African ports are struggling to capitalize on a surge in shipping traffic as the Middle East conflict disrupts other key global trade routes. Our chief Africa correspondent, Jennifer Zabazaja, joins us from Johannesburg. Okay, so this is also interesting. Talk to us about the situation for African ports and whether they are seeing a big boost from this rerouting of global shipping.
Well, Jumana, it's a bit of a complicated situation, but if you take a look at what we are seeing in the region, there are a number of factors pointing to why we're not seeing the boost that I think many people would expect. And if you take a look at it from this point of view, there are operational constraints that are limiting what we're seeing in the region. So I'm talking about things like weather disruptions that are limiting the competitiveness of some of these ports, some of them including Durban and in Cape Town, which ordinarily would be where where many ships would reroute to, although it does cost quite a lot more and also is longer in time. But still, it is limiting the amount of competitiveness compared to what we are seeing in the region. There's also East African hubs that traditionally would be a rerouting option from the Suez Canal, like Djibouti and Port Sudan. But unfortunately, because of their limited capacity compared to Gulf operators, we're seeing shipping providers not necessarily turning to some of these options. And so the concerning thing here is that this opportunity that could have been an opportunity for a number of these African ports is looking like a bit more complicated, just given the limited capacity that they have and also just what they're able to do. What we did understand from some of our reporting is that value capture is really concentrated in fuel supply and maritime services rather than container throughput. So still, we are seeing some increasing activity, but not at the level that I think many would anticipate, just given the rerouting that we're watching.
Jen, are there any ports that are seeing gains from the rerouting or the rerouting that's going on in the Middle East region?
Based on our reporting, there are a few, and we're seeing gains really concentrated in a few of these ports. And I'm talking about Port Louis and Mauritius in particular. And then there's also one, Luderitz, in Walvis Bay in Namibia. And in particular, the reason why we are seeing those wins is because they're becoming a place where a lot of these containers are refueling or at least getting bunkering zones available for a number of these ships. But still, the complicated issue here is that what we had seen earlier in the year and late into last year is that a number of container companies and shipping companies were trying to look at alternative options in other ports along various parts of the African continent. The complicating factor here is, of course, what we're seeing in the Middle East. And then at the same time, we did see an increase in activity, piracy, which we've reported on this show quite a bit. And so it's become kind of a double-edged sword for a number of these shipping providers. But I did mention Port Louis. We have seen activity there surge 42% to 294 vessels in March from the previous month. And so while there are a few winners, I don't think it's at the level where we would expect in the past. Jumana.
Jen, thank you so much. Jennifer Zabajaja, our chief Africa correspondent in Johannesburg. Well, coming up, Anthropic threatens fresh disruption in financial services, launching a range of new AI agents. More on its push into Wall Street next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersachi in Dubai. Well, we are getting some earnings, and this time we are getting them from Equinor, the Norwegian energy company. And just to give you the latest figures, first quarter adjusted operating income after tax coming in higher than estimates at $2.86 billion versus estimates of $2.64 billion. They expected 2026 share buyback program is up to $1.5 billion. So that is the share buyback program that they're guiding to. Still see full year capex at around $13 billion. And the first quarter average production was 2.3 million barrels per day. So those are some of the key figures coming through. But essentially what we did get was a beat on the adjusted operating income figure after tax from Equinor, in line with many of the other energy companies that have reported this week. Now, Anthropic is stepping up its push into Wall Street, unveiling new AI agents designed to handle a range of financial services tasks. For more, we are now joined by Bloomberg's Avril Hong. Avril, talk to us about what these new AI agents do. How significant is the expansion really into financial services?
Yeah, it's pretty significant. I mean, Anthropic essentially unveiling 10 new AI tools and is directed squarely at Wall Street professionals across a range of services, so banking, insurance, asset management, fintech, and it's touted as being able to do things including pitch decks for client meetings and flag things for compliance reviews. And indeed, not long after being part of what prompted Sespocalypse, the software sell-off, we were already seeing seeing last night, that reaction in the markets in terms of the selling pressure that came for some of these financial-related firms, Moody's, S&P, FactSet, Morningstar as well. There was a market reaction. So it is essentially a sense you get of how Anthropic is broadening out its influence beyond just Silicon Valley. And as some have called it, it's coming for Wall Street.
Yeah, well, apocalypse. I can't even say that word, but I know what you're saying about software as a service and the apocalypse there. Anthropic is also reportedly expanding its partnership with Google. What do we know about that?
Yeah, I mean, these two are rivals, but they're also investing in each other. And I think the latest reported move in how Anthropic is committing $200 billion over 5 years to invest into Google Cloud and chips, I guess is a sign that it sees its own demand for products, its AI tools is very strong. There's confidence and there's faith of the pipeline in demand for its products, so much so that it's committing to building up more computing capacity as things go. And against the backdrop, of course, of Anthropic really needing to show how it's bolstering its revenue as well ahead of an eagerly anticipated IPO. There's been talk about how it's mulling a fresh funding round that could put its valuation at $900 billion. And this would put it, help it leapfrog against OpenAI, which of course is the world's most valuable AI startup. So a lot of things at stake at the moment for a company like Anthropic. Joanna.
Yeah, totally. Avril, thanks so much, Avril Hong. Well, coming up, Saudi Arabia has cut the price of its flagship crude for Asia. We'll discuss that next. This is Bloomberg.
We're going towards a cliff on oil and oil products by the end of this month.
Physical shortages.
We have physical shortage already, but it's just in countries we don't care about.
Okay.
So then they will, right, because they're poor.
Yeah.
But then it'll go to middle income countries like Vietnam and Thailand. Then it goes to Japan and Korea. And then it comes here. And here's the thing, you want to fly out of the United States? You can say we have oil, we have jet fuel.
Right.
Okay, can't take it with you?
Amos Hochstein, former Middle East senior advisor to President Biden. Now, Saudi Arabia has cut the price of its flagship crude for Asia. The kingdom is easing premia from record highs, even as supply disruptions in the Middle East keep prices near historic levels. For more, we are joined by Anthony DePaula, Bloomberg's Middle East energy reporter. Anthony, break this down for us. It is perhaps somewhat surprising that Aramco, Saudi Arabia, are cutting their official selling prices to Asia at a time when there's such a scarcity for crude. So what is going on here?
Yeah, well, these prices are based on the benchmark. So this is going to be a differential based on the benchmark of the crude trading. Excuse me. And we're seeing very high levels for crude because there is that lack of supply coming out of the Persian Gulf. So we are seeing those very high levels. And this is a cut in the price. However, it's less than the market expected. So we're really seeing the price is a little bit higher than what the market was forecasting for those barrels coming out of Saudi Arabia. The other issue is that the Saudis and the other Gulf producers are pricing for oil that normally sells out of the Persian Gulf, and they're not sure if next month, which is what these prices are for, if next month we'll have the Gulf open. So they're in a real dilemma of how do they price that oil. We're in a high price environment now with the Gulf shut and Hormuz shut and the oil not able to get out of the Gulf. But if that opens up, then the price logically would come down as a lot of that supply comes onto the market. So it's kind of a dilemma for how those producers sell and price that crude. I'll remind you that Saudi Arabia and Abu Dhabi are the two that have kind of workarounds to get around the Strait of Hormuz. Aramco is able to sell oil via a pipeline, the East-West pipeline that runs from its main fields in the east along the Persian Gulf to the Red Sea port of Yanbu.
Yeah.
Abu Dhabi has a pipeline that runs from its main fields in the Abu Dhabi deserts down to Fujairah, which is on the coast outside of Hormuz. So they've both got those workarounds, and that's where that oil is getting sold from, but at limited quantities because Saudi Arabia has a max capacity on that pipeline of 7 million barrels a day. Some of that which goes into domestic refineries, which goes into jet fuel and diesel that gets exported. So some of that is being used. That leaves them only a max capacity of about 5 million to export. So that's where we're seeing this pressure on those prices, Joanna.
Yeah. Super interesting context there. Anthony, thank you so much. Anthony DePaula, Bloomberg's Middle East energy reporter. And of course, keep a close eye on energy this morning. 108 is where we're at for Brent. We're also keeping a close eye on dollar yen. Something funny is going on this morning. The yen has rallied 1.75, almost 2% versus the USD just in the last 15 minutes or so. Of course, it is a Japan holiday. And remember, last week there were lots of talk about potential intervention where we are down to 155 as a level. So keep an eye out on that as we head into the European session. That was it for our show. I'm Joanna Bersacci in Dubai.